Good morning. It's Thursday, May 15th. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So looking at the price action overnight, quite a wild ride here. U.S. equities, precious metals, also energy markets, even some of the grain markets here seeing quite a bit of volatility overnight. So global stocks, they are falling, and we identified that 5,900 as your critical kind of resistance zone in the S&P 500. You can see over the last couple sessions, we've consolidated after breaching through that resistance right at that level, and we identify that in the chart pack, and we send it out to our clients every couple days. Now, where U.S. equities will go from here, a lot of it is determined upon the data, and also Fed Chairman Jerome Powell is going to speak. You look at crude oil futures, down about 3.5% here on the July contract, trading at 60.51. So the June is no longer the front month. Now, if you're working with us closely and you get that chart pack, 63 to 65 has been that resistance point. And we also reached out to a lot of clients, let them know that we were reducing some of those June positions up near that level here, and even looking at put spreads back to the downside, as we believe that crude oil futures will go back down into about the mid 50s and perhaps test that double bottom here. You look at the precious metals markets, quite a wild ride overnight, and it's because of a lot of different factors out there. Now, if you watch this video on YouTube, only a shortened version going forward is going to be published here in the next few days. We are finishing up the details on our portal here, where we're going to put the complete video on there for our clientele and also for our employees, so they know what we're thinking here on different trade strategies, different trade ideas, and we can get a lot more detailed as it is taken down as a public video and into a private video, where we'll give specifics on trade recommendations we're putting out. If you get the email version of this, it's also going to just be a link to a reminder to log into the portal, so there'll be no more emailed version of this video. So if you want more details on how to become a client, send an email to info@bluelinefutures.com or go to bluelinefutures.com. So looking at the economy here, we are going to have retail sales. They are expected to be just a tepid 0.1% rise in April versus the 1.5% rise we saw in the prior month. And it's because of the fact that a lot of people rushed out to buy goods, buy end products here before the tariffs came into place. We'll also have PPI and Empire manufacturing data coming out at 7:30 a.m. Central Time. Federal Reserve Chairman Jerome Powell, he's also due to speak at a central bank's monetary policy review at 7:40 a.m. Central Time. So expect to see some volatility around that. Now, the Fed has been quite hawkish here, and it's somewhat justified because of the fact that they don't know what's going to happen with the tariffs. The problem that we have now is that we made a deal with China, but the deal is only for 90 days. It's almost a pause, and that's it, where we'll get the phase 2 trade deal. So if you're looking at volatility in the equity markets, volatility in the dollar, yields, and things like that, it's most likely going to come in the next 90 days. That's why a lot of the clients we have that have put options in the equity markets, we've been rolling those forward as well. Now, you look at gold futures, I've identified the last few days, and I published on this video where I said that I felt like that gold futures would break below that critical level of support, that 3220 down to 3200, and start a new price band. The level of support is the April high, and then also that parallel channel that comes up that we've been in for about 3-4 years that we've come up. So that old resistance is now going to be new support, and that's what we tested in the overnight session. So gold futures, as far as I'm concerned, just don't have the firepower to get back up to 3,500. You look at the reasoning, we've got trade deals being done. We've got U.S. equities and risk assets rising, everything from Bitcoin to the S&P 500, all traveling up to resistance points. You have deals being made across the globe as far as tariffs are concerned. You have Middle East tensions dying down. President Trump is over there right now cutting deals with Qatar, Oman, Saudi Arabia. He even met the president of Syria. So really those Middle East tensions are dying down. You have Russia and Ukraine, they are brokering deals together for a ceasefire. So that's fading off as well. And it's just a lot of these things, again, are starting to die down that make gold the safe haven play. Now you look at 2-year yield sitting at 4%. Well, that's pricing out that over the next 2 years that yields are going to be 4%. Well, guess what? That's where the Fed funds rate is. So what it's pricing in is no interest rate cuts at all. You need interest rate cuts in order to propel gold prices higher. So that's another leg in the stool that's been kicked out. So why is silver futures under pressure? Well, because one dynamic and aspect of silver is that it's a precious metal. So if gold futures go down, of course silver futures are going to fall with it. Now, why are silver futures holding up so well in relation to the gold market? Because the gold-silver ratio sits at 98-1, and just last Friday it was 101-1. Well, because of the fact that it's got what? An industrial demand aspect from it, which is 54%. So you look at copper futures holding that critical level of support, which is 450, and holding at elevated levels in a wait and see type game as far as what the economy is going to do and what things are going to do. So if you look at the dollar index, the dollar has declined back to 100, putting a little bit of support back into the gold market, and I believe that's why we come off of our lows. So look at the ETF flows, exchange traded funds. Yes, they did buy the dip here a bit on the gold market, adding about 27,000 troy ounces. They did cut some of those holdings here in the silver market, about 718,000 ounces. You got gold up 7.1% year-to-date percentage change. You got silver up 2.7% year-to-date percentage change. Small decrease on the silver, small increase on the gold market. You look at crude oil futures again, running into resistance up near $63. The high in the overnight session was $62.46. Now we're pulling back about $2.24. I don't think that crude oil futures provide much value at this level here, kind of in no man's land, just like the silver was. When you get up to about $33, it's kind of no man's land in the silver market. And you really want to identify that. It's about measuring and mapping kind of the markets here as far as channels, as far as different technical analysis and things like that. And I oftentimes find it very important to have a chart with just technical analysis, and then a chart with maybe your indicators and things like that. If you look at any of the charts I have on, they have very, very little indicators, if any at all. I only use 2 or 3 that I identify that tend to front run some breakouts and tend to identify volatility events that are starting to proceed in the next few trading sessions. So again, if you want to become a client of Blue Line Futures, send an email to info@bluelinefutures.com. If you'd like to get this complete video here, we're going to start doing some one-offs and things like that where you can get that as well. Remember, futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.